Good morning, everybody. It's Thursday, 11th of May. We're going to do our usual current market analysis, presenting myself, Anil Kumar. Remember, this is a for educational purposes only and not intended for investment advice. I'm just going to wait a minute or two to allow for people to attend. I know sometimes there's an issue registering and getting through the Zoom sort of registration process. So I'm just going to wait a second or two. And in the meantime, I'm just going to keep an eye on the charts as London opens. And I just want to see how the FTSE is opening right now as we speak. Drill down to a little bit of a smaller time frame. I just want to see how it's opening. Those of you who do trade sort of UK GBP or the FTSE index will know that there is some news coming out later, which I'm going to talk about at midday. So we'll talk about how to play that. Let's see how everybody's doing. Cool. Okay, great. Okay, so as I normally do, I'll start with the quick presentation, which I have to do every single time. And as I mentioned, it's the daily, or should I say Tuesday and Thursday market analysis. I always have to mention that you must read the risk warning and disclaimer before we get started. This is mandatory, so do take a few seconds to read it and understand it. For those who haven't been to the webinars before, my name's Anil. I'm head of trader education. 20 plus years of experience trading futures, bonds, commodities, anything that moves up and down, traded at some point in the last 20 years. And now I kind of provide trader education, live trading room, hosting, and I do mentor, students who are looking to take trading seriously. So the agenda for today, we've done the introduction. I'm going to look at a number of different charts, and please do, if you want to, in the Q&A chat box, just either say hi or ask a question or ask for a particular chart for me to analyze. But I tend to follow the same format. I look at the key big liquidity instruments that a majority of people trade. And we're going to cover news reports. So we've got some interest rate announcements coming at 12 o'clock in the UK. We'll see how that is to be played in the run-up and afterwards. And then I'm going to just run through, and I'm going to be using some of these tools, free ZenFlex Plus tools, as we sort of go backwards and forwards between charts and analysis. And I'll show you how to access these. These are the instruments I'm going to sort of look at today. I'll flick around, but I also want to cover some charts we looked at on Tuesday and just see how they panned out today. And I want to make a habit of doing the analysis and then looking to see what it did thereafter. So let's go straight to charts. And by the way, I'm just watching the FTSE open in the last couple of minutes. And I'm going to do a little bit more work on the FTSE once I finished talking about what we discussed on Tuesday. So on Tuesday, we did our normal top-down approach in terms of identifying key areas and general structure of gold and what we believe is happening. This is in the backdrop of interest rates in the UK and the US and inflation figures. So gold is heavily vested in that particular instrument. So I from a top-down approach, drew some lines. We drew an area which we needed to break out. I think I did this a couple of weeks ago. It eventually broke out. It tested, hit a new high, and then Tuesday, we started looking at where we could take the pullbacks in the continuing uptrend that we had sort of analyzed it to be. So if I just go here, I drew this on Tuesday, and I wanted to see if this orange area, this consolidation area of many days ago, is holding, and whether this uptrend is now really starting to sort of head back towards this wick that was created last week. And we saw a bit of consolidation. I mentioned that this is an important range that we need to have a look at. It broke away from that range, hit a trend line, and it's been sort of grinding up. More news in the last day or so, which gave it a spike, couldn't get higher or hit this level here. So we're kind of trapped, or getting ourselves trapped into a bit of a range. I want to see if this trend line is going to hold, and whether this consolidation area is going to be retested one more time. If, for example, we get a bounce off this trend line, and what is a trend line? I'm going to do a brand new analysis of the gold anyway. This is more of a summary of what we looked at on Tuesday, just to see, how everything is sort of panning out. And we can see that even right now, it's starting to test this. So if I just drill down a little bit closer, we can see that it's now nudging from this trend line that we drew several days ago. And the areas that we're going to need to be really watching, and this is from an intraday perspective, by the way, not a longer term perspective. Let's draw a little object here. So we can see here, I'm going to have to just wait for a second. So this is an area where it came back, didn't quite touch a trend line, bounced off it, hit the bottom of this consolidation area that we drew on Tuesday, and retreated from it. And now we're really waiting to see if this trend line is going to hold, and we're going to see if it closes. Remember, this is the 5-minute bar. It's the first 15 minutes of London opening, which never really tells you too much in terms of how the day might pan out. But certainly right now we're seeing weakness in the price of gold. So we're going to keep watching this for a minute. I just want to see how it behaves, A, on this trend line, and B, on this consolidation zone. And while we're doing that, let's just watch it for a few more minutes, if you don't mind. In the meantime, if you have any questions, please don't hesitate to ask. I'm here to help you. And the more questions, the better. So as we know, there at midday, we have midday London time, we have the UK announcing its interest rates. And that obviously is going to move the British pound and maybe markets generally. And we're going to, I may come online for that, but I'm not sure 100% yet. But I will certainly tell you what I think at the moment in terms of what may happen as a result of this. So we've broken this price here at 2024. As I said, and I'm really drilling down to a very small time frame, so this is just purely me watching how it behaves. When the last time it came down, bounced off, didn't quite hit our trend line, and struggled really to get back up into this area here. So this is an indication that it could be weakening, but it may just be trying to find some liquidity underneath these levels here before it starts going back up again. And I think we've talked about this several times in terms of the gold price, interest rates, and inflation. And I think the general consensus, certainly from central banks, is that inflation, may be coming off the boil a little bit, whilst there's a lag between the effect of interest rates and the effect on the economy more generally. I wanted to have a look at oil, because oil is or the price of oil really does affect not only consumers with their fuel, but also oil and its byproducts are used in so many different industries, including the delivery of commodities. Everything basically revolves around the price of oil. And if I just go to oil, and I haven't done this for a few days, but I want to just talk about oil and its impact on interest rates and inflation. As we know, if I go from a weekly perspective, oil reached a peak from a weekly perspective, around the 127. Obviously, this was to do with the Ukraine situation, and since then, various things have happened to take, the high price off oil. But certainly, the increase in inflation was factored in by the price of oil getting to these levels. Fortunately, if you're on that path, it's been sort of declining ever since. And again, I'm going to draw a few lines. The same top-down approach I do for every instrument, and any instrument is just start framing levels where I think, oil prices may hold, or where they may find a level. And this will have a direct impact on things like the price of gold, the impact on stock markets. So, it should never be underestimated, the importance of not only the value of crude oil, but also the dollar index, and how the value of the dollar affects all currencies actually that are paired against the US dollar. But we're going to look at really just the oil price at the moment from a weekly perspective. And we can see from weekly perspectives, we're kind of in a range between 82 and 63. It had a gap, and anybody who knows me knows that I find these gaps fascinating, because often what will happen is price will move. And if I just go in a bit closer, prices will return back to this gap here. And I think, let me just see if I can draw a object here. The reason why I talk about charts, generally speaking, regardless of what we're looking at and what instrument we're trading, patterns repeat themselves, across the board, across time frames. And really, in the years I've been trading, it's about identifying. Make that an orange. It's a very strange color, khaki. So this gap on oil, couldn't get past here apart from getting some liquidity. And price has been coming off the boil for the last few weeks. Found it couldn't keep on going below 63, retreated from a weekly perspective, and now we're seeing a bit of strength, which again has an impact on interest rates and inflation. So if I now go down to a daily perspective, I'll just make this gap a little bit more accurate now that we're getting into much more tighter timeframes. And we can see here, this gap made the markets or the value of crude oil go high, couldn't get much past these points here. And in fact, in many ways, really, it was, if I just put a line on the peaks of that, it looks to me like this was really just a false breakout from these, from this long consolidation from December, from a daily perspective. Had a look up, immediately retreated and kept coming down until it hit this previous level, knocked out some liquidity here, and we're kind of, and I'm going to draw another line here. As I say, if you have any questions as I go along, please don't hesitate to ask. So we've got ourselves a range of the price of crude, which is, affected, as I keep repeating, not only in terms of inflation, interest rates, and other commodities. And we're looking to see how this will have an impact, how crude will move on, on other factors like the Ukraine situation and what have you, because that's obviously a factor. But we're kind of smack bang in the middle of this 82-64 range. We've got a gap to fill. So I would expect, from a daily perspective, that prices will come back to this level here. I'm going to make this another color. Get red. Looking to see how prices will come back to this area here, and then going from a longer term perspective. The longer term perspective is downtrend, consolidation, support, resistance, fill in the gap, hit this level here, and then we'll look to see if prices will come and fill this gap here. Obviously, this is subject to fundamental news coming out, because anything that could happen at a moment's notice in relation to the the current situation with Ukraine and various other factors could have a dramatic impact on the price of oil. But certainly, I'd be looking at this level here very, very carefully to see if price is filling this gap to then come back down and retest and fill this area of the wick. So there's a potential, setup here. Obviously, if a breakout of this area here, and we put the cursor on, we'll look to see prices get back up to about 93, something like that. So a breakout to here. So we've got ourselves covered on oil from a sort of weekly, daily perspective. So let's just see what gold is doing. Remember, we were looking to see if prices would hold this trend line or hold this previous low from the 10th, a couple of days ago. Remember, I'm looking at a very short time, in 5 minutes. If I go to the hourly perspective, maybe a little bit clearer. So prices broke through that trend line, but now have found a level of support at the moment, right? Anything can change at this previous low. So prices shot up, came back down, couldn't get past this level here. Let me put the cursor on. And now prices have hit that level in probably the last few minutes. And immediately retreated from that, which indicates to us that this level of support is strong, because it withdrew from there, hit that, came back up, hit it twice. Interestingly enough, this trend line from a sort of hourly perspective, we've got another 40 minutes left to see if this closes above this trend line and starts showing some strength. I think gold will sort of continue going up. What it may do, which I suspect it will do, we've got about 3.5 hours for the UK interest rate announcement. So we'll be watching to see if it consolidates around here, and then subject to the news, there'll be a move either up or down, depending on news, if it's expected or not. So that's kind of like a follow-on from Tuesday. We can see that it's plunged through there, but immediately withdrew from that price, retreated, and we're going to watch now to see what happens in the next few hours, because that could be key. Because if this level has held once, twice, 3 times, so this is obviously at 2021, probably nearer 2022. If this holds, and when news comes out, we could see either a breakdown to this range here, or a move up to break these highs here and continue going upwards. As I said, I expect this large wick to be filled at some point. So that's the gold and oil. Now let's have a look at British pound, because that's probably likely to be most affected by the announcement. And just so that we can check what the announcement is, we're going to go to our Zenfinex portal. We'll talk about this in a bit later on, the next half an hour or so. Let's just have a look at economic insights. And I want to make sure that I'm only looking at high and G7. I could actually just make it just the British pound, but what we're able to see, that we do have some sentiment indicators. Sorry, that's tomorrow. It's Bank of Interest rate decision. Previously, or at the moment, it's 4.25. The market expects it to go up. And we have some PPI and jobless claims later on this afternoon. So it's going to be quite a fast-moving market this morning, running into the US time market open as well. So let's just do a little bit of analysis on the British pound, the interest rate decisions, and how we can see or look for levels where markets may reach depending on the announcement. So those of you who've been with me here before, you'll know that there's a pretty cool tool called on economic insights. And what this does, this looks at previous events and looks to see how the British pound was affected by previous news announcements. So this chart here is showing that from March's perspective, the interest rate was at 4%. It was forecasted to go up 0.25%, and in fact, it did go up 0.25% when it was announced. And here we can see that from the announcement, what happened in the 15 minutes afterwards, prices showed a large wick. As those of you who've traded news before, often you'll get a spike and then a pullback. And then what it did, it came back, and in the next sort of 15 minutes, it went up 36 pips. And if I now go to a slightly larger time frame, let's say for the 4 hours after March's news announcement, you can see that you have to be very careful when trading news, because it can be a bit unpredictable. So this is March's. So if I go back even further to February's announcement, what happened in the 4 hours after the news announcement? So we had an initial spike up, and just for perspective, in February it was 3.5. It was forecasted to go up by 0.5%, and in fact it did go up by 0.5%. And we can see that whilst there was an initial spike up, over the 4 hours, it generally weakened the pound against the US dollar. So if we compare that with March's, in the 4 hours, it shot up 72 pips, or the range is 72 pips, came back down, and then, more or less sort of got to the high. And so this is from March 23rd. So let's have a look at what happened to the British pound after that. So if we just mentally mark 23.30, if we now go to the charts, and hopefully you can see the British pound here. So if I go back from a daily perspective, I'll just double check that one more time. Make sure it's the right number. It's 23.40. So if I draw a line, 23.40, which is about here, and March the 23rd, which was about here. So we can see here, in fact, I need to move it just one day on there. So during this day, we looked at what happened 4 hours afterwards. It came down, but then it strengthened for the whole month, basically. And now we're at this stage again. So the impact of the increase in previous month, although it was projected and actual was as forecasted, it made the price of the pound go up. Now, it may also have other factors like, other news that's come out during that month, but we can see, generally speaking, it's ended up higher than the previous based on the, let me just go back to the charts here, just one second. So as I was saying, during that 4 hours after the event, it was actual was as forecasted, had a dip down, initial up, down, and then for the rest of the month, so here's the 23rd, and here's 23.40 roughly. So for the rest of the month, the pound has increased in value, and that probably also had something to do with the dollar weakening as well. So as we know, the British pound against the US dollar, a weakness in the dollar would also make the value of the pound go up. So now we're at a point here where I'm just going to go out a little bit to the weekly and maybe to the monthly, and I'm going to start doing our sort of top-down approach. So let's just get rid of the lines first. Delete. And I'm just going to delete these two. So those of you who watch this regularly, I do exactly the same thing every single time. I look for important levels in from a sort of longer term weekly perspective. So from here, we can see that prices found this level support, and put the cursor so you can see it. This is going back all the way to 2019, resistance, broke through, found support, broke through, found, remember this from a monthly perspective, found resistance, broke through it, found support. So obviously, this level here is going to be important. It's around the 1.2756 level, and we're not far off from that. So our framing from a monthly perspective is this this level here. If I go to the weekly, we can drill down a little bit further and see that, in fact, there's another level from a weekly perspective here. We're okay on the weekly from here. So we can start seeing there's a frame now. And literally for the last, 8-10 weeks, the pound has been strengthening against the US dollar. So I now go to the daily perspective. It's hitting this level of resistance. We have some more levels that we need to be wary of. So price came up, hit this level, came back down to these monthly and weekly levels, stayed in this range for a period of time, broke out of it, retested it, and tested it for quite some time from a daily perspective. And now it's hit its head on the weekly and monthly levels of resistance. So what does this really mean for us? What we're actually doing by doing this exercise is, and doing this exercise every single day, is we're trying to frame the market so we're not blindsided by levels that we haven't taken into account. And if I just now, go down to a 4-hourly perspective, we can see that it tried to get past this level here, but no sooner it hit it, it came back down. It's now exactly at this point here, which is 27.78, which is, and hopefully by doing this exercise, you'll start seeing that these levels, once drawn, are often retested, and opportunities occur when you break out from these ranges. So right now, from a 4-hourly perspective, and if I go back to the daily perspective, we can see that we're trapped in this little range here. And I'll draw a little object for you here, just to make it a bit clearer. So if I now go back to smaller time frames, we can see that whilst we've got a few, I'll just make it a little bit bigger. So it's consolidating from a 4-hourly perspective, all the way up to sort of the beginning of the month, really. So resistance came into this, consolidated, and it's been bouncing up and down. We are now probably going to get a breakout of this move, and that is going to be dependent upon the news coming out in a few hours' time, in 3 or 4 hours' time. So these are levels you need to watch out for. And obviously, if we look at last month's news, which was the 23rd of, we have to go back to the daily for that, 23rd of March, pound has been rising. May also have been affected by the weakness in the dollar, so we can't take it exactly the same thing will happen, but it's certainly showing strength if interest rates are increasing, or weakness on the dollar, depending on how you want to look at it. So what are we really saying to ourselves? So let's drill down to the 4-hourly. We can see here, and I would encourage those who are trying to get a bit of a perspective on the marketplace, to draw these levels in and remove them, and draw them and remove them, because as markets progress, different levels appear, different levels of support and resistance appear, and they are powerful and useful, because this, you have to ask yourself the question. I think I do this on almost every webinar, is why did it turn here? Why did it turn here? Why did it turn here? Why is it potentially turning here? And asking yourself the question will give you answers if you look and search, from previous price action around those same levels. So we can definitely see from an analysis point of view, right, that this level here, 25.51, probably 25.50, is important. So if, when news comes out, right, we're going to watch to see, does this level break? Does it close back into this level? And does it continue going up? Or does it completely destroy these previous levels? And then it will start heading to these levels here. So let's draw where we think the market will go once this news has been announced, or where it will likely turn. So we can see here, just going to change the color of that to make it distinguish it from others. So if prices do break down, and this is from a 4-hourly perspective, there is a good chance that we'll come and retest this level at 24.62, or if it breaks on the upside, let's put some levels, and it breaks these 2 previous highs here, there's a good chance that it will come and retest. I have to go to the weekly for that. So where will it go if it goes on the upside, or where will it struggle, should I say? So we've already drawn this level here. It's at those levels right now. And we can see here we had some previous consolidation. Around this level here. What do I mean by previous consolidation? What I mean is that prices bounced off this level here, came back, tried to break up, but it couldn't, and immediately fell down. So this level at the top here is extremely important for us to watch, because it will be extremely tough for the market to break that. It will probably retreat when it enters this zone here. So I know this is quite far away, and if I go down to a daily, see if we can find something a bit closer for us to look at. Yeah, you see this whole fast-paced market, it will probably come and fill this. So I imagine what will happen is once we break out this consolidation zone, it will come and retest this level and then come back down. What do I mean come back down? Those of you been to my previous webinars, you'll know that it will probably come and retest these levels here. So prices will probably, if it's going to have strength, come and hit this level at 30.46. Remember, this is from a slightly longer term perspective, not from an intraday perspective. And then it will come and retest this, and for it to continue going up to break these levels here. So I'm giving you very much a longer term perspective here rather than a short term. Let's go back down to short term. And I'll be watching these charts, and if I see anything, I'll put it up on YouTube. But I'm now using very, very simple tools, support, resistance, channels. I've now started to build an idea of what I'm going to be looking to do and where my targets could be, depending on which direction the market reacts to the news coming out. Because although it's forecasted at being 4.25, let me just double check that before I make a... So the next event, so we can see here, it's currently 4.25. It is expecting to be 4.5, forecasted to. Doesn't mean it's going to be. And if it's not as forecast, then there'll be increased volatility because larger traders will be positioning themselves based upon the forecast. So, watch out for that news coming out exactly at 12 o'clock UK time and see how that moves the British pound. So we've already looked at levels which we think, dependent upon whether prices go through this level here or down here, we're starting to look at areas for targets and how we can jump in on this. Because if we go down to smaller time frames, we can then start seeing, even from a longer term perspective, the consolidation of this area here, where we might have some issues. I'm going to move this line down just a little bit here, because this was resistance, found support there. So our question is, if it continues going down, I'm talking about the British pound against US dollar on a 1 hour time frame, is it going to find support here? Is it going to come and retest this? And for that, we need to be watching the news when it comes out and how the news reacts. We've already looked at how the tools that Plus Zenfinex can help us, because we looked at previous impact, how that impact not only in the 4 hours after the news event, but also the month after that. So that's why I think, signing up for this free membership is a really cool tool, because you can use tools that you can't really find, easily. And therefore, kind of anything that helps you with your information process, that's going to help your trading. So let's just have a look at some of the other charts that we've been looking at this morning. So let's see how gold is behaving. Is it holding this level of support that we drew from, or this trend line we drew from Tuesday, expecting it really to come back and continue on its path up, subject to obviously fundamental news coming out as well. But it's interesting to me that it's holding this level quite well now. Literally, if I go down to a small time frame, literally hit it on the bottom and really closed. If you look at sort of decent time frames, like 30 minutes, for example, it's closed above this trend line that we had drawn based upon this price action here. So for the last few webinars we wanted to see a breakout. It broke out, retested, created a new high, came back into the consolidation zone, and started its way to look to see if it's going to fill this wick. And the way that we'll know it's going to do that if it breaks this high here. So gold is interesting to watch. I know I've been going on a bit. Does anybody have any questions? Any question, whether you want me to look at a particular chart or explain what I'm doing, or explain, how I would look at charts that you may want me to look at, I'm more than happy to do that. So we've looked at oil. We've looked at oil in the context of inflation and how that does affect inflation and how inflation affects interest rates. So it's all interwoven. All these things are sort of all have to be watched more or less. And then we've got the last chart I'm going to look at really is the NASDAQ, because it is really interesting to me what is happening. From a fundamental basis, you would think that we're reaching, some levels where the market may turn. Why, for the last few months, has the NASDAQ been increasing when inflation is high, when interest rates are going up? You would think that would have a negative impact on the indices. But I find this very interesting. If I do the same kind of top-down approach, you'll start seeing that, from a pure technical basis, there looks like strength still, showing itself, particularly in the NASDAQ. We know that NASDAQ predominantly are, tech shares. And so, with the advent of all sorts of things going on in that space, I won't go too much into it with AI and everything like that. And the video, with the AI hardware as well is having some good impact. So if I just draw a little bit of analysis on here, and by the way, like I said, in the chat box, if you have any particular instrument that you want to look at, I'm more than happy to do that. But let's do a quick top-down approach on the NASDAQ. So if I go now down to weekly, we can see that this level here, 15 through 20, market's reached a high, not an absolute high, because it has been higher than that all the way up here. But from a weekly perspective, we can see that 15 to 20 was, after its high, came back down, tried to retest it. So this is definitely a resistance area here. I'm going to create another level here, which really, it's not that much of a strong level there. So I might just remove this one. So from a weekly perspective, we can see that, I'm going to put it from a weekly perspective. And we can see from a weekly perspective, daily perspective, we can see that this is the range. And after a breakout of this resistance area here, tried again, pulled back, came down to, interestingly, this level here. In fact, that's more of a object which I'm going to put in here. It's really been, moving up in an upward trend. And we can see here really that nothing visible has shown any weakness. In fact, when it came back down, it's showing strength, strength, strength. So from a NASDAQ perspective, it's looking strong. And whilst there's some resistance at 33,687, for the last, I would say, from December, it's been grinding upwards. We'll find some resistance there, but I wonder what's going to happen there. We're not that far away, about 300 points away from that. Once that breaks, I think it will definitely be on its way up there. So this is going to be a key area that you're going to watch out for. So we can start drawing, where we're looking to, wait for pullbacks to get in on the trend, or whether we're going to take a reversal based upon some resistance levels and previous highs, going back to September, July last year. So look, it looks like indices, particularly the Nasdaq, is still looking strong, despite the doom and gloom in terms of the banking sector, inflation, interest rates. Technology seems still to be looking quite good. And if I draw a channel here and start giving you some targets where I think there is certainly, if it breaks this level here, there's no reason why it can't get back up into this previous high here, because as the channel expands, it could fill very easily, not obviously in a straight line, but it will grind its way up, particularly if it breaks this level here. So this is an important level. It breaks that, nothing to stop it really getting all the way up, to this level here. Might get a bit of resistance here, but this is much more of a longer term perspective. So this is not for intraday trading. I just find the Nasdaq interesting because it's kind of counterintuitive, because with all the doom and gloom of interest rates and inflation, you would think technology would be suffering, but from a technical perspective, it doesn't seem to be doing that. So look, I wanted to spend the last few minutes really just talking about these tools that I think are really useful and can kind of aid and assist you in your own trading. And they're absolutely free. So if you want to go to the the plus.zenfinex.com site, we're going to look at a couple of items. I've only got 10 minutes left, but I want to cover technical views and featured ideas. If I do that now, so the main three tools that I think are very useful are technical views, this is within the Zenfinex portal, so it's easy to join up. It's a free membership. You'll be able to access these tools and get some trade ideas, trading views from other analysts. And these are much more of a short-term perspective. So if we just look at the British pound, as we've just been doing, so we can see here that according from a 30-minute perspective, we can see that they are saying that they are expecting it to continue falling down until it reaches 25.30, and that's based upon some moving averages, RSI, and a 9 moving average on the RSI. So it's quite useful if you are new to trading, because you can go and look at different instruments and get a gauge, get an idea of what other analysts are thinking about, particularly from a short-term perspective. A lot of the stuff I've just covered is really much more from a longer-term perspective, but you can pick your currency that you may be interested in, and there'll be another analyst who will be talking about what they think, and I think that's really useful. If only to sort of confirm what you were thinking, or to look at their idea, draw them up on your charts and say, no, that doesn't make sense to me. I still prefer my idea. So it's always good to compare your thoughts, your ideas with others, and see the rationale from both points of view. They're using very much pivots. So they're kind of saying, go short below this level here, 31 13470. I will do a webinar just focusing on these three tools. We have looked at the economic calendar, which I think is really useful, particularly at news times. And the next item I want to cover really. And as I say, if you have any questions, by the way, just put it in the chat box and I'll try to answer it. So if I just go to Forex, none of the majors are. New Zealand dollar is being covered here. So let's just look at that one. So they are bullish on the New Zealand USD. And the reason why they're bullish, they've recognized on May the 11th, for a period of up to 12 hours, price change since technical. So they're kind of using outside bar bullish on the 11th at 7:35 GMT, and a 5-minute suggesting the outlook is bullish for the next 12 hours. They're also using RSI, which is at the bottom, oversold, looking for it to head back up. You probably guess I don't utilize moving averages and oscillators that much. I tend to look at forward looking indicators, things like support, resistance, channels, trend lines, Fibonacci's, because they project into the future and I can take a view on turning points as they appear. But on, nothing to say that some people prefer to use things like RSI and MACD. I have nothing against them personally. Whatever works for you is good. So at least with this tool here, you can see how other analysts are looking at it and seeing if they, marry up with your own idea. I will probably do a whole webinar just on these three tools very, very shortly. If you do want to, get notified when I'm doing these webinars, the special webinars, then, register for the free membership and you'll get lots of other stuff included in that. And I'm really going to go to Q&A now. If there's any questions, please ask now. I can look at any chart that's on the sort of ZenFinex platform, and we can see your ideas against my ideas and see what we think is going to happen. I think from a pure market perspective, particularly if you're trading, the British pound, you're going to kind of be, I wouldn't suggest doing anything really until and after the interest rate announcement's been made, and then see how price reflects on that. We've drawn some levels where we think that as a result of this news, different levels where prices could go to in terms of their continuation from the longer term patterns. You can see here, from a monthly, weekly perspective, the pound's been gaining strength. It's now coming into this area here, which may be an issue. But if it then continues, we could see it get back up into, this double top here. And when we do get to that, we'll definitely have some views on that and what we can do as a result of that. Right, I don't see any questions, so I'm going to, I think I've covered everything I want to cover today. The euro dollar, I don't think on the euro dollar. Would you like me to look at the euro dollar? Please let me know, and I can do that. In fact, why don't I just do that quickly? We've got to about 5 minutes. So let's go from a longer term perspective. Let me see if there's a question here. Okay, so I have a question from Jack. Thank you for the question. How do you wait for accumulation pattern to confirm your entries? Right, so Jack, that wholly depends on the time frame. Accumulation is another word really for consolidation in my mind. The way that I look at accumulation is where prices stay at a particular level for a reasonable amount of time. I view these levels as accumulation, because They can also be called supply and demand levels, but where market is stuck in a particular price range, and in fact, I think gold might be a better example for that. Let me just get this toolbar out of the way and I'll show you what I mean. So during the last few webinars, we were looking at this area here, and markets were going sideways for quite some time, right? They were just going up and down, up and down, up and down, which from a perspective is that this is fair price. During this period of time, traders didn't think gold was valued higher than the top of this. Let me magnify it so we can get much more closer in. So this orange box I drew many weeks ago, prices couldn't get above these two levels here, the lower level and the high level. And what is happening? Look, we're still getting accumulation. There are trades, buyers and sellers transacting business during this period here. It's only when we had some news come out that the breakout or this price was no longer a fair price. So any accumulation that was done here, right, whether it's supply and demand, was disturbed by this sharp move up. So this price is no longer a fair price. Ironically, it is, because prices no sooner had they hit the high, they came back down into this level, certainly at the top of the level, giving us an indication really that prices are strong because they no longer are stuck in this accumulation phase. I will do another webinar on accumulation and distribution. Accumulation and distribution really is much more relevant, in my opinion, on stocks than it is on currencies. Gold, yes, it has that same kind of level. There's lots of buyers and sellers doing transactions within a tight range. And then it broke out of it, came out back into this range here, and now looks like, of what we've been saying, even though it's hit a little peak here, is their strength. That strength will be dependent upon interest rates and inflation. Does that answer your question, Jacques? If it doesn't, please counter it, and I'll try to go into more detail. Now, the accumulation distribution also is dependent upon time frame. Because if I go to a 5-minute time frame, which is not really smart, we can see during this period here. And by the way, I never really trade when we have our live trading room. You'll see I don't trade less than 1 hour time frames because anything less really than sort of an hour is just noise in many ways. So we can see here during this period here, prices rapidly came down, obviously as a result of news, and found this level here. What is this level? This level is that there were no more sellers below this price here, and there were no buyers for this short period of time. And I'm really just talking about a period of 7 o'clock London time. That's only about sort of 5, 6, 7 hours. And so there's nothing really going on. Buyers weren't interested in taking it higher. And if I go a little bit past it, we can see, even though we had a breakout, it came back to retest this consolidation or accumulation area and eventually moved away from it. And if I even go a little bit further, we can see how that level has held all the way for a couple of days. So this level of consolidation, accumulation, was held for quite some period of time. Every time it came out, buyers tried to take it up. It came back into this fair value price. Fair value price is an area where buyers and sellers are kind of agreeing to an extent, that this is a fair price at this moment in time, which obviously changes with new news, etc. Well, that's summarized. Yes, I can understand the concept. Thank you. My pleasure, Jack. And if you come onto the platform, you can, I also do, one-to-one mentorship, so we can have Skype calls. And my goal and purpose really on these webinars is to help you to utilize the things that I've learned in my trading for the last 20 years, because I was helped when I first started trading, and I'm at a point now where, you know, it's my turn to give back and my turn to give support to people who are interested in taking trading seriously. And, you know, I'm more than happy to help. You know, I'm predominantly an algo trader, so I develop strategies based upon mathematics and price action. And, you know, that's kind of my main forte, but I've pretty well much seen every type of strategy out there. There's nothing new in trading, in my opinion. So on that note, let's just get the last screen. And really, it's just to, let's move this toolbar down. So we just covered the technical views. We looked at the economic calendar as well. You know, feel free to join up a membership on the ZenFinex Plus website. I'm there. I can answer questions for you. And, you know, if you want to, you know, we can have, you know, one-to-one sessions. They're totally free. It's provided by ZenFinex. So the purpose is really to help traders overcome, you know, barriers or hurdles that they may have, and any knowledge that we can pass on, or I can pass on to you, I'm more than willing and happy to do that. And on that note, I'm going to wish everybody a lovely day. If you're trading the pound, keep an eye out for the midday news. I'm talking about London time, and I'll probably be watching that and maybe do some sort of summary of that for the next webinar. I do appreciate you turning up, and I appreciate your questions also. And I look forward to seeing you on the next webinar, which will be the next scheduled one, which is next Tuesday. Thank you for attending. Take care. Bye-bye.